All right, ladies and gentlemen, got your watch list coming into November 13th, 2019, and something really big just happened in the stock market. Again, I thought I was being dramatic, but then I saw some other people in the mainstream news cover it, but today was one of the first days in a while, I believe since 2014, and then the first time before that was 20 years ago, that the Dow Jones closed unchanged. So I know we've seen a lot of moves up and down, but this is actually a very uncommon occurrence. So anytime something historical in a sense happens, and I know it seems really small in this case, but I love discussing it, and this brings up a little bit of interesting things that did happen today, but I think this in and of itself was very interesting. You can see here that CNBC, they talked about it. They said the Dow is perfectly unchanged on Tuesday, a rare occasion on Wall Street. The 30 stock average closed flat going out 6 decimal places. So that's all flat. That's just straight no change. It was the first unchanged close for the Dow since April 24th, 2014. Closes like the Dow on today's Tuesday are also unusual for other indexes. The S&P is closed unchanged through the 2 decimal places just 10 times since 1980. Here is even a visual representation. So that's today. And then this was 2014. Then you can see before that, the last time we saw it was around 2000. So it's came at interesting points, and you can see back in the day, even when we were points of more volatility, we've seen that occur. But for those people who want to say, yeah, you can see it in the 1980s, the late 1980s, then right before the 2000 crash, you do not see that occur once between 2005 and 2010, the financial crisis. So regardless, this is telling you something. We've been focusing on, money in and out, the rotations and all this. So what is that telling you when you are not seeing a move there? So I'm going to go over a little bit of that, or more of the other factors that would put that into context. And then we're going to go over our plays. I got some keys for you tomorrow, but then we're going to talk about the plays we made today, the other big earnings we're setting up for, and we even saw the criteria fail. So hopefully that gets you on your toes, baby. The market's exciting, but let's get into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you subscribe. And most important thing you need to do, post your watch list below. Let us know what you're playing. Let us know what you're looking at. You guys have been killing it. Let's source that information. And if you do not know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, so you can watch all of these plays. The plays we're going to go over today. We need to talk about the earnings, the plays we made today, Disney and FGen. We did all of that live in real time, and we are streaming for 7 hours a day. YouTube.com/the stock market. So we better see you there. And if you're going to miss it, don't forget your stream insurance, baby. First, link in the description. Options trading extremely risky. You can't lose out on your financial investment. Please consult with a financial advisor. This is educational purposes only. And don't sign up for the stream alerts unless you watch the whole video, okay? And be positive and respectful. Listen to your parents. Control your capital. Don't let them tell you can't do anything. Drink a lot of water. But right off the bat, watch for big moves in bonds to point to slower moves in the market. So again, with the market unchanged like this, we even saw TLT go up a little bit today. I think a pretty decent amount. And now you could even see TLT's been basing out, and I think this should even give you guys a better visual to look at. Here is the 10-year on the bond. So you could see if it gets back to this certain level, this is going to be July 2019. This is before we saw the big move. So if everything stays below there, that's telling you one thing. If it comes all the way up here and comes down, this is a common thing with bonds. You could see all the way before we dropped in July 19th. And that one thing, bond rates went down. They came up a little bit. They would edge up, but they would stay. You wouldn't see big volatility. Then they'd come down. Then just keep going down, bounce up a little bit, stay like that, and then just come down. The biggest difference you're seeing here is these whipsaws. When you're going down a lot in rates and going up and down, this is pointing to what people are doing. I guess an example could kind of be like a rudder in a ship. And this is what I'm saying to watch out for with big moves in the markets, where the small rudder could be pointing left in one direction, but the rudder pointing left, it'll be like inversing with the market and bonds. The whole ship will start turning right. But just because it's holding left doesn't mean the ship automatically you see it turn right. It takes time. And now halfway through that process of turning right, if the rudder shifts all the way back right again, you'll have the bonds, the rudders on the right side, but then the ship is also turning right. It'll take some time to switch back over. So that's what I'm saying. Watch with bonds to point for slower moves that are going to be happening. So keep your eyes on that, and then watch out here with earnings. Now, everything we talked about on Monday, the beginning of the week, earnings is going to start to slow down a little bit here because we're getting some of the bigger earnings tomorrow, then Thursday morning, then again, end of the week after that. But you could get to see and watch for the effects to shine through. Are we going to see now the volume come through? How is the news going to react? We even saw what happened today, and that could even relate to some of the stuff we saw today because we finally, we actually went up a pretty decent amount when you look at it. We barely opened up. We went straight up. There was a lot of good news. Then it kind of faded out. Then Trump had that economic speech and the market came down a little bit from it. But then it started even to drop right here. This is when China even responded, and they responded to some of quote-unquote Trump's lies. But I don't think he brought up anything groundbreaking in that speech. We streamed that live, and a lot of people were kind of even bothered by that. Some people were like, this is a campaign space. This isn't even economics. No, I need to find a put play off of this. This is bullshit. But it was interesting to see kind of the stance he took, and one of the surprising things that he said for me was kind of what he said about Xi Jinping. He was like, talking a story like we were like it felt like we were just like in a bar or something, and he was kicking his story. It's like, oh yeah, and then Larry was there, and then Larry's a big guy. That Xi, he's not that imposing of a guy. I forgot he said another quote after that, but it was very disrespectful, and we want you to be positive and respectful, but I don't know how that is going to be taken by the other side, or maybe that could even be hinting a breakdown to talks, but watch out for that. And then that even brings me up to even my last point here, even with the market being unchanged, something historical like that and proceeding in what we're seeing with the bonds, what we're seeing with the trade war, and even again being at all-time highs. I'm still on my Grim Reaper watch. Watch out for negative trade war news, but specifically, I'm looking for something related to a company or even an industry now. And I don't know if it'll be oil or something like that. I did make a video on this in the past, and I think I do need to talk about it again because I think this could be saying stuff with bonds and where some of that repo money's been going, if you guys remember that from the last few weeks. But it has to do with the CLO market. So if any of you guys are familiar, drop a comment on that. But that is a loan market. It's pretty much junk debt for the most part. But if that starts to dry up and there's issues there and we're actually seeing stuff break down, that could be maybe pointing towards an area of issue or kind of a point of failure. And don't take that in the ultra negative sense. But what I'm saying is that if even there, if we are going to see kind of a breakdown here, we're going to need one industry. We'll have to really lead, but we need to see one industry kind of go. And that's where I'm watching for the Grim Reaper there. Or it could just be a company with bad news, a big market cap company with bad news, or again, maybe it is the trade war, but we will see. But let us get into the plays. So as far as what we played today, I only made 2 plays. I made Disney. They were going up today, and this was actually before they came out with the news. Literally came out. I was like right here. We got it literally a minute right before as I was watching it in the morning. I grabbed a November 22nd, a next week 146 call for 25 cents. It's at 28 cents now. I did jump right when I bought it. It almost like doubled or tripled there because right away it shot up there from the news or the report that Disney Plus was better than expected. So the contract's still up. It's holding. It's a little further out of the money. We got time, but I was playing, the release of the Disney Plus was one thing, but they had the good earnings. I was hoping it would kind of be like Qualcomm. Stay up, it drops, but not too much. But then this could be the next level to take it up. But if it doesn't start to go up from here and can't break out from here, I mean, watch for another season of range-bound Disney. But if market does good, and even if the market does bad and it rotates, Disney could be good. So that's why we got that play. But again, I thought that was a good leverage, just outside of one standard deviation, but the key was the price. It was 25 cents. It's a post-earnings mover. That's the reason behind it. So control your balances and keep it small because that's even the theme of the next play. The next play we got was FGen, FiberGen, and they started dropping, and this one was all rumor-based. I still think it's a rumor. I still think it's low quality, but it's interesting how the stock has moved with it. But the stock started dropping. I saw it on the low ticker. I started scanning for news to see what happened, and I saw reports that people were saying somebody died in a clinical trial or that they're hiding it. Then it came to like Muddy Waters Research. It was this one people on Twitter who put it, and then it was like a knockoff Target analyst, like a knockoff analyst report, looking like, from a WordPress page, and they were breaking it down. They were pretty much bashing the stock. But I was seeing that headline and how it got circulated, so I thought it was decent, and we got that play. I grabbed a December to see with time, and remember they had earnings as well too, but I got a 22.50 put for 20 cents. Again, you could even see by the prices I was willing to pay for it, it even signaled kind of what I even felt by these, and that's why, I'm sticking my hand in the cookie jar, but I'm not going too big. Again, if we're right on these, if Disney has a huge run up and does good, that $20 could turn to a lot, and same thing in this case. But those puts went up about 300% right away. They're back down. So you could see that, but I wouldn't get caught spending too much money on this, but I'm going to be watching that. So there's that play. Those are those 2 new plays we made today. And now let us talk about the plays that we were in. So we dropped another 1,000 on Qualcomm today. You guys see we're getting closer to that lower end because Qualcomm dropped, but I kind of like the play a lot better considering my situation, because if now spent the first 2 days of the week pretty much giving up the gains, if we go back up to 93, 94, I'm going to start approaching the max gain. But if it does give up here, then that play is pretty much going to be done. We're going to walk away with that 3,000. Again, I'm in that win-win position on there. So if it goes lower, I just make less. If it stays up higher, I make more. And if it goes up higher, I make more, but not as much. We're still going to be holding that, but now here are the other earnings plays. So now we'll start with the AMAT, and then we'll go to Walmart and AMAT, just because now this was up about 30 or 40% today, and AMAT had a weird move, and then now you guys can see it's came down. So there you go. In this case, it's helpful that I got it, because now you can see the prices before if you haven't played it. So shout out to Colt, baby. And also, who lives in a pineapple under the sea? Obviously, you know the answer to that question, but that is what we're going to say now, because for everybody who comes on stream and asks, hey, what are the plays? What's the AMAT or Walmart play? I'm going to ask them this question, or maybe you guys should respond to them. If somebody says, hey, what's the play? You should ask them who lives in a pineapple under the sea and see if they made it this far, because we go over this almost every single day. And I just want to make sure they're putting in roughly, 5 to 9 minutes of effort in. You know what I'm saying? Either learn something, I don't know, but I thought I'd throw that in here. I love you guys, and thank you for watching this far and being respectful and taking your education seriously. The Colt loves you. You love you. Everybody loves you. Let's go, baby. But here's the AMAT. I got 62 calls. I got 20 of the 62 calls and then 10 of the 63. So I spent $380 for the calls, or for the 62s, and then $120 for those 63s. But now I'm down 13% on both of those. Those were up today. And then we got the 50 put, the 5.6. Those are up 5.6%. We bought those for $360. So that's my plays both ways. So here's AMAT again, same thing. We're right in the middle of the standard deviation on the downside, and we're a little bit closer on the upside. But now this is what's a little bit scary here, even for Walmart, because Skyworks perfectly met the criteria. This one is going to be one to watch on the continuation. But remember, they were expected to move 7%. They only moved 3.5%. But they, on average, move 9%. So maybe AMAT will do better, because AMAT's never expected to move that much. So maybe it does move a lot. But this one met the criteria, and both those plays are going to lose. We got the 87.5 puts and the 112 calls. So Skyworks is bye-bye. And again, too, that play I did, I think I spent a lot less than the AMAT and the other one. So that's at least good. But hopefully you guys could see. So this isn't going to always work, and this is where you guys have to be able to determine what makes the most sense, and this is why we control our balance. So it's kind of good, even though we've kept hitting the criteria, it's good to see when it doesn't hit, because this is a reminder why we're not supposed to play so big on it. So I have an 850 position total both ways. I was up on Skyworks about 100% coming into the earnings, so I could have took the more money. So I may trim down this AMAT before the earnings. We're going to see. But now everything's roughly around the same price we played. It's not a lot different, so that's actually pretty good. So if you haven't got into it, but I want to see how the option premium moves in before the earnings. But now this is a little bit different than the Walmart, because Walmart, you see up here, we're up 20% now. And take a look. This is doing what Qualcomm did, and this is why setting up for the earnings is important. This is why I'm buying my options in different intervals. This is why I bought them in different intervals on Monday. This is why I wait and watch the options and then wait till tomorrow and wait till the day before earnings. It's not going to stay like this. Look at AMAT. AMAT was up 50%. Skyworks was up 50%. Then Skyworks goes up 100% by the end of the day. AMAT now comes back down, and AMAT's now break even. And then Walmart, these weren't always up like this all day today. I was down on the puts and down on these 130s, but then it came back, and then they started ripping, and now they're up more. So now I'm up 54% on the 128s, the initial play from Monday. That's closer to the money. And then I bought that second set later in the day, these 130s. Those are up 16%, but now we're up 8% on the puts. So I bought the puts and the calls here, the 108s and the 130s. I bought those at the exact same time, and both of them are up now. So that's kind of nutty to think. We're up 19% total, but you can see here, we're a little further out on the put side. The puts are a little further out, and then the calls are pretty close. So we have to see if that moves. But same logic, even coming in with AMAT, I have $1,800, I believe, in that total. Or no, excuse me, I have $1,200. Whew. I thought I had a lot more. I was getting worried, but I think I got the gain, so now it's $1,400. But still. So I might want to trim some of this, or if I trim ANAT, I'll probably be okay with holding this in there. But watch how the option prices move. So again, come on stream, ask me about the prices. Again, if you already know the plays, and if you already now are familiar, that's kind of the good thing when people ask about the play. This is really the information you want from me if you're already in the play, or if you have not made the play, so that you could be able to get these at the best price. You know, you're going to be overpaying for these. You might still be able to get a deal on these, and then the puts are doing something too. But now you're seeing how the exact same trade you can make, and this is why you're not supposed to follow blindly. At least be in the game. At least get the stream alerts if you're that focused on it, or at the same time, at least have patience. You could and wait and let it come to you, because now you can make the exact same trade we made, and the puts theoretically should be cheaper, but they're not. And these other plays are more expensive too. And really, Walmart hasn't changed too much in price. If you even look at it for the last few days, here's Monday. This is when we bought it. Take a look. It's lower than when we bought it, but we're up 20%. So think about that and factor that in on how it plays out. Ooh, but it was at 120, 121 the day before. This is going, Walmart's going to be fun. But those are pretty much your plays. Let's finish it up and see what the rest we need to watch out for. Be smart if you're in those plays. Good luck to everybody. Keep me in your prayers and let's go, baby. But beyond those, I have a few other plays. Oh, I forgot actually. No, I got one more for you guys. I got a potential play. I got two potential plays. So again, option trader, extremely risky. Can't lose off the months of financial investment. Please consult with a financial advisor. This is educational purpose only. These are potential plays I was looking at again because we're managing a lot of the earnings plays. We've taken a big focus, but I don't want to forget some of these, and McDonald's is a really good play I want to be watching here. There's two different plays I like on it. One, you can see how it's moved again, and here's one of the best things. Take a look all week, even for the last 7 days since last Monday, it hasn't done much. This is an opportunity. So this is an opportunity for both credit spreads as well as a normal play. So really what I'm saying with this, get a credit spread or even an iron condor if you want to do both sides. Pick your side. Do you think it's going to go up, down, or stay the same? I think they're paying a pretty good ratio, and there's still a chance. There's two chances that could occur here, and you could even set up a play like this. You could play a spread. You could play even an iron condor, and then buy some cheap options just in case it breaks out from that level. But there's a good chance it's either going to stay cucked like this, or it's going to, if it's bouncing in a range, it won't go higher than that. Or now, the next play, if there is a surprise rally or even a rotation, so if the stock bumps up with the market, or even if the market goes down and then McDonald's becomes one of those just big leaders, the 195s are cheap, and they could get even cheaper, and then the 197.50s are for the real sickos. I'm not in this play, but this is something I'm going to watch. So if the scenario's there, I'm going to take a look. I'll look to grab, and these are what I'm saying for the sickos. These are 13 cents, and you can see on Monday they were 40 cents, but even last week, these were going for $1, and then same thing with the 195s. The 195s on Monday were going for $1, but even last week these were $2-3 and even $3-4 before that. So again, I just showed you the chart of the underlying, so you see how the options reflects that. But now instead of staying the same, the options are dropping. Though these have gotten pushed to the wall, so watch out for that. Maybe even the 190 puts too. You could kind of see something similar with there. So with those, but that's why I'm saying spreads, condors, or if it does break out one direction, up or down, you could get some of these sicko plays for pretty cheap. So I'm going to be watching those. And then lastly, Uber at the money puts. Same concept, and this is what we even talked about on the 11 at 11 today with how you don't need to be early. Where if we do that McDonald's play, just be on stream or get your stream alerts. But even this concept, time is important in some instances it's not, and being late can actually help you. So imagine all the fiasco with Uber. This was last week, earnings drop, but then guess what? It hits a point and starts doing the same thing. But take a look at these at the money puts, and there's a lot of volume on them. But even these 26s at one point were going for $1.20, but what happened? The stock kept going down, but slower. These get pushed to the wall and lose their value. So now you could get the same option, but it'll take you a lot less money up front and a lot less of a move to be profitable. So I'm going to be watching some of these at the money puts, and if Uber slips up, that'll be good. So those are two potential plays. I have not played those. I'm going to just keep those on watch. You guys can remind me about them tomorrow, but we will see what happens. As far as everything else, I'm going to be watching all those plays, watching AMAT, Skyworks, FGen, Walmart, then Expedia. We still have that play. And again, same thing with that whole push to the wall logic in these earnings continuations. You see how they're coming to life. Expedia falls in that category now as well too. We're already in that play. We have those 95s. They're up $150 from last week, but then I'm down $130 on the credit spread I sold. So we're going to see, but if this breaks below 95, Expedia could be another big week and get ugly. And then this company came out of nowhere. Some of you brought it up today. Shout out whoever brought that up, but Datadog. I don't know what they do. They shot up 17%, and this could be a good earnings continuation. So we'll see that. They definitely caught my eye. I think there's another company. I think it was like A Biomed or something like that. Somebody else brought that up, and they did good. So we'll watch those, bring those up in the morning. Any earnings continuation, as we've seen, is pretty important. So watch those, watch McDonald's, then watch Disney, like we said, and then Facebook. Facebook was 1,000%er today. There were some weeklies. It went up, and I remember I kept bringing up Google. I should have switched that thought to Facebook because the Googles were still expensive, and I still like the Googles, but I'm going to be pushing the Googles into the wall like I've been talking about with all these other plays. I want them to head in that direction, but I want the options to start getting cheap. The Googles are expensive, but Facebook went up. They introduced their new payment system, so give it time to see how this plays out. But essentially, if that news is positive in the morning, you might just see a multi-day move off this, so watch out for Facebook. In a bounce like this, it's kind of looking like Netflix did that other time. So I'm going to be keeping an eye on that, be watching Google. Then there's Twilio. They could be a good continuation or anything in their realm, but they started dropping on report that WhatsApp, one of their biggest customers, is scaling back its use of them. But this is the same news that hit ANET. So ANET lost, they had one big client, Microsoft, and they were backing out, and you saw the effect on earnings. So this wasn't earnings, but this is pretty bad, but they dropped a little bit. So I don't know when their earnings are. Maybe that could hint something. So watch that. Then lastly, McDonald's and TLT. Then finally, keep your eyes on Qualcomm. This is the one we're still making those big plays on. And then these 4 plays now are a little bit interesting because I want these in the long term, but I could also watch these for moves because I realize they're all really growth stocks at the heart of it, and that's what's attracting me to them. And then maybe some have a dividend, in this case Macy's, but I don't know if it's a dividend or trap or not. They're pretty, I don't know if I want to say undervalued, considering I'm factoring in what's going on with the future, but they pay a 10% dividend, kind of a dividend trap. I was considering putting that in the long-term portfolio today, or I was waiting for Snapchat. I think Snapchat from here is either going to rip up or come down. It actually was up and then sold off. That's crazy. I didn't even see that towards the end of the day, but I was going to get the Macy's, but I was like, I don't know, Macy's kind of scares me, even though it pays a nice dividend. We already got some good dividend stocks in there, but I was like, I'll just wait. If Snapchat falls from here, I'll use that as an opportunity to buy some more Snapchat. And then Beyond still coming down, and they kind of had a bigger move today, but same price, pushing those to the wall. And then Uber, all of these could be potential long-term plays we've been considering at some point. So I'll keep my eye out for those, but even Uber could be a different type of play, and I'll take a look at some of the other values. But I think you also got Canada Goose for earnings in the morning tomorrow, so we'll see how that affects retail. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure you're positive, respectful. We see you in the morning. Get your head in the game. Hopefully you guys are taking all this information from all these sides. Understand and recognize the opportunity you're in. Be grateful. Understand the coach loves you. Understand you got another week after that, another week after that, another week after that. We got a lot of things to take care of. We're coming into the end of the year. If you guys thought 2019 was exciting, you have yet to see anything, baby. I promise you. So hopefully you make it long enough to last these few months, but I think you will, baby. I think you'll be good. So let me see those watch lists, and I'll see you in the morning, and let's go.